Home sales are tumbling. We know that. Mortgage rates, however, are headed higher. According to Freddie Mac, the nationwide average on the popular 30-year fixed-rate mortgage jumped to 6.04% last week. That was up from 5.72% the week earlier. The average rate on the 15-year fixed-rate home loan climbed nearly 0.4% to 5.64%. However, those rates are still below a year ago levels. 5-year adjustable rate mortgages picked up from a week ago, but 1-year ARMs dipped slightly. Mortgage hunters, surprised by the sudden increase in rates after a steady drop, are wondering if now is the time to act. We get the take from two mortgage industry insiders now. Broker Fred Glick is CEO and president of U.S. Loans Mortgage, and Michael Moskowitz is president of Mortgage Lender Equity Now. Gentlemen, good to have you on the program.
Good to be here.
So should I refinance?
I think it depends on your individual situation. Depends on the state you're in. Are your closing costs low? New York and New Jersey, for example, would be different. The closing costs in New Jersey are much lower than in New York. But I think in general, if it makes sense to you at the moment, you shouldn't let, what do they say, best be the enemy of good, and refinance and see what happens in the future.
You know what, though, Fred? I mean, let's face it, sure, rates are going down. We expect the Federal Reserve to continue lowering interest rates, and maybe that impacts mortgage rates. But at the end of the day, even if people watching wanted to refinance, they may very well not be able to get that mortgage that they want because of the tight credit situation. This is a different animal than in the past interest rate drop environments.
Oh, totally. Used to be pretty much anybody get a mortgage in the last couple of years, but that has completely changed. It depends on your loan to value. The values are dropping. Freddie and Fannie have put in restrictions if you're over 70% and you're under 680 credit scores. If you're over 680 credit scores and your loan to value is good and it makes financial sense, go ahead and do it. You just don't want to try to grab the lowest thing on the lowest date because it's impossible. I have people telling me, I'll wait till it's in the 4s.
Right.
You know, hey, they're still waiting. They're sitting on their hands.
I bet. Michael, as a lender, talk to me a bit about what you're seeing. Obviously, the credit market has gotten extremely tight. But aside from the potential borrowers with great credit on their side and cash for a 20% down payment, what's the cutoff from your standpoint? What are you looking for? What should people know?
Well, I think if you have, the main difference is, are you going income check or no income check? So let's separate those two. And if you're going income check and you are within Fannie Mae or Freddie Mac limits, you can still get a great deal, even if your credit score is down to 570, 580, and you have a low loan to value and you have liquidity in the 401ks. So if we as a Fannie Mae, Freddie Mac seller run it through the underwriting engine, and under certain circumstances you can get a regular rate, which in today's market, it's about 6 1/8, which is down 1/8 from yesterday, even if your credit score is down to 570, 580. If you are no income, if you can't verify your income, you better have a score of at least 680, 700. You better have liquid assets, and you better have a good payment history.
Yeah, that's what everybody wants to know, clearly. Michael, let me ask you what you think is going to happen. We're looking at a graphic now of home prices having declined and where people are expecting prices to go for 2008. How do you see this market playing out for the rest of 2008? Do you think things get tighter? You think home prices have a lot more room to fall, or what?
I think that home prices will probably fall 7-8% this year and another 7-8% last year. I think if we compare it to the late 80s and then what happened in the early 90s, the late 80s, the increases were less than they were now, and it lasted for less of a period of time. And the abuses in the mortgage lending industry, as Fred said, anybody who can get a mortgage, anybody who basically could breathe got a mortgage, right. 80, 20, 100%. That abuse level has gone on much longer now. And I think the downslide will be longer, and then the level period will be longer. I mean, in the 90s, there was no increase from pretty much 1990 to 95 or 96.
Gentlemen, good to have you on the program. Thanks so much.
Thank
we
you.
so appreciate it. I know we'll be calling you back to come back to continue talking about this developing story on mortgages.